Stop. Seriously, stop. Everything you think you know about why Bitcoin crashed is wrong. Let me show you what actually happened.
Look, it wasn't whales, it wasn't some shadowy manipulation, it wasn't a rogue fund, and it wasn't the Fed. Everyone is out here chasing ghosts, and they're missing the real story that's staring them right in the face.
See, Bitcoin is in ETFs now. We're talking BlackRock, Fidelity, the biggest institutional money on the planet. And that changed everything. It's not some isolated crypto asset anymore. It's now a risk component in the world's largest portfolios.
So when the market took a dip, it wasn't a person making a panic call. It was automatic systems all across Wall Street that just fired off. This isn't a conspiracy theory. It's just pure cold math. The system itself did this.
It was like a domino effect, happening in 3 lightning-fast steps. First, the trigger. Automated risk managers just hit sell everything. And yep, Bitcoin was on that list. Then, the accelerant. All these complex hedge trades were forced to unwind, creating this tidal wave of selling pressure. And finally, the cascade. The dealer's hedging math created a brutal feedback loop, where every sale forced even more selling.
And you want proof? You want real proof that this was the system and not some kind of attack?
All right, get this. On one of the absolute worst days of the crash, the Bitcoin ETFs, they saw over $300 million in net inflows. Yeah, you heard me right. The big institutions were actually buying, while their own automated systems were being forced to sell.
This wasn't manipulation. It was just the financial plumbing of this brand new machine breaking under the pressure and then automatically fixing itself.
But listen, that's all in the past. Here is the part that really matters for what's coming next. Because this whole system, it's a two-way street. The exact same mechanics that created that waterfall of forced selling can flip. They can trigger an unstoppable cascade of forced buying. The same system that crashed the price can send it to the moon, maybe even faster.
And the old playbook, looking at on-chain data, trying to guess retail emotion, it is completely blind to this. It just can't see this coming. The new playbook, the smart playbook, depends entirely on understanding these mechanics.
Let's be clear, Bitcoin is not the same asset anymore. The old game was about blaming whales. The new game is about understanding the algorithms. The crashes are mechanical, and you better believe the rallies are going to be mechanical too.
So, the game has fundamentally changed. The only real question is, have you?
Go ahead, tag someone who's still blaming manipulation for everything. They really need to see this.